Did you know that holding cash is one of the fastest ways to lose wealth? You might feel safe with money sitting in your bank account, but in reality, inflation is silently eating away at it every single day. And the worst part, most people don't even realize it's happening. Today, we're going to be diving into why saving cash isn't enough, how inflation destroys purchasing power, and most importantly, how the wealthy use infinite banking and whole life insurance to stay ahead. If you want to protect and grow your wealth, this is a must watch. So, first, let's start with inflation, the hidden tax on your wealth. The Consumer Price Index, or CPI, which tracks the cost of goods and services, has been rising steadily. Over the past 20 years, inflation has caused a dollar today to be worth far less than what it was back then. Here's a simple example. If you had 10,000 in savings in 2000, that money could buy a lot more than it could today. In fact, to have the same purchasing power today, you'd need almost $17,000. I'm sure you've seen it every day. From the price of eggs today, plus rent, everything just gets more and more expensive, yet incomes aren't really going up. So what's happening? Your money is losing value every single year. If it's just sitting in a bank account earning 0.01% interest, you're actually losing wealth over time. So let's take a quick look at history, because inflation isn't just a slow, steady problem. It can completely destroy economies when unchecked. Post-World War II, inflation got so bad that prices doubled every 15 hours. A loaf of bread would cost millions in their currency. Zimbabwe had the same thing happen from 2007 to 2008. At its peak, inflation in Zimbabwe hit 9.76 times 10 to the 100% per month, meaning that prices doubled every single day. People carried around trillions of Zimbabwean dollars just to go buy groceries. This also happened in Bolivia in 1984 to 1985. Inflation hit 20,000% in 1 year, wiping out savings overnight. These are extreme cases, prove an important point. Cash is not a reliable way to store wealth. And yet most people think keeping cash in a savings account is safe. But here's why it's a dangerous mindset. Your money is depreciating. Inflation is higher than a bank interest rate, meaning that you're losing buying power every single year. Most people are heavily relied in the stock market. They invest everything in stocks, assuming they'll always beat inflation. But what happens when the market crashes right when you need your money? Another is the longevity risk. We're living longer than ever before, but trying to retire at the same age. Will your money last 20 plus years in retirement? So if cash savings don't work and the market isn't always reliable, what's the solution? This is where infinite banking comes in. Infinite banking is a strategy that the wealthy use to store and grow their money. Outside of traditional banks, instead of keeping cash in a savings account, they put it into a high cash value whole life insurance. And why, you might ask? Because unlike cash, this money is compounding and growing tax-free every year, no matter what's happening in the stock market or the economy. So here's how it works. You fund a properly structured whole life insurance policy where the cash value grows tax-free and earns dividends. You can borrow against it anytime without affecting its growth, and you repay yourself instead of a bank. Think of it like this. If you put $100,000 in a savings account and withdraw $20,000, your balance drops to $80,000. But with infinite banking, you can borrow $20,000 while your full $100,000 continues to grow. That's the game changer. Here's why this strategy works better than keeping cash in the bank. First, it beats inflation. Your cash value grows at 4 to 6% annually compared to a near zero savings rate. You also get tax advantages. The growth is tax-free and you can access it tax-free through policy loans. Next, it gives you liquidity and control. Unlike 401ks and stocks, you can access your money anytime. Finally, there's protection and guarantees. Your money is not affected by stock market crashes. So let's do some math. If you keep 50,000 in a savings account at 0.5% interest, in 10 years it'll grow to $52,500. If you put that same 50,000 in a high cash value life insurance policy growing at 5%, you'll have over $80,000. And that's not counting you can use the money while it's still in that account. That's a massive difference. And that's why the wealthiest families and even the banks themselves use this strategy. Holding cash isn't safe. It's actually one of the riskiest things you can do in today's economy. Inflation, low interest rates, and longevity risks mean you need a smarter strategy. That's why infinite banking through whole life insurance is such a powerful tool. It lets you store wealth, access liquidity, and stay ahead of inflation. The choice is simple. Let inflation steal your wealth or take control and make your money work for you.